What's going on, everybody? Welcome back to the Loan Lads, presented by Park Place Finance. This is part 2 of episode 4.
Today we're going to dive into ground-up construction, specifically for the first-time borrowers and what Park Place Finance has to offer. So to kind of recap, kind of like we spoke about last week, ground-up construction is a real estate method of actually building from the ground up, whether it be a spec home or a custom home. We offer that here at Park Place Finance, and today we're really going to dive deeper into how first-time ground-up construction borrowers can qualify solely as them as the borrower, the signing member or the sponsor, whichever word you want to call it, and really how unique that product is to Park Place compared to the industry standard there.
Yeah, so, as many know, the industry standard is a lot of people don't offer ground up for first timers. It's just not a product that they want to offer. They typically require at least one or more, right? Some lenders even require 3+. 3+ is our experienced borrower, right? So that's like top tier leverage. We, however, want to step in and help them on the first project. And I think the reason why that is, we've touched on it on a couple episodes here, is building that relationship up, right? There's definitely a little bit more documentation that goes into a first timer. There's obviously more qualifications as well. Mm-hmm. But as a whole, right, for why would we lend to a first timer? Let's just walk through that.
Yeah, for sure. Going back to, usually lenders look for 3 ground-up constructions, and the reason for that is ground-up construction is typically a bigger project than a fix and flip. In our eyes, we kind of see it a little bit differently. Why we would lend to a first-time borrower on a ground-up, just like a fix and flip, is typically there's less roadblocks I see in ground-up construction. Unlike fix and flips. Fix and flips, you can go into a project, and we always touch on getting your budget right first time. It's much easier to actually budget out for a ground-up construction than it may be for a fix and flip, just due to the fact that there's typically less unforeseen circumstances that can increase that budget. For example, you tear the drywall back and you've got rot on your framing. You happen to find some foundational issues. With ground up, everything's going in first time, brand new. And really what you're relying upon is your contractor to just be able to build a ground up construction project. The only thing that really can increase your budget on ground up is if you underestimate your budget, right, in terms of the standard cost there, or cost of materials may increase throughout the time of the project. Now, given that it's a 12 to 18 month project, typically we're not going to see too much material increase. So the fact that you can get your budget pretty much spot on from day dot is a really, I would say, the first reason why lending to ground up first timers is just as, viable as lending to ground up. Yeah, to lending to a first-time borrower on a fix and flip.
Yeah, and I think you have to have some compensating factors, right? When you look at a first-time investor as a whole, but really a builder. There's a couple different ways to qualify for that, but I think the main qualities that we're looking for, or compensating factors, so to say, would be liquidity, right? We want to make sure that the borrower has high liquidity post-close. Want to make sure they have enough for reserves, make sure they have enough for maybe any funds that come up that maybe we didn't account for on the budget originally, right? That's the first one. Second one's location of the property. We want to make sure it's low days on market. We want to make sure that it's a market that's actually selling, right? We don't want it to sit on the market for too long, especially in these short-term type loans. And then third is the contractor, right? We've touched on this a little bit, but having a good contractor partnered on the project, they don't necessarily have to sign, but they're have a contract with the actual owner or borrower themselves. We want to make sure that we vet their experience, that they've actually done this prior, right? And that's why we document those 3 COOs that we talked about in part 1, or maybe final permits as well.
For sure. And I just want to go back to the statement that you said there, the GC does not need to sign. There's a lot of lending companies out there that will say they'll lend to first-time ground-up construction investors, right? But then they require the general contractor to sign a personal guarantee or a completion guarantee, right? At Park Place Finance, we do not require either of those items, which is why it's such a niche product, right? The fact that a true first-time ground-up construction borrower, who is the only and main sponsor guaranteeing the loan, and they don't have to go find a general contractor who's willing to sign a personal guarantee. Number one, it's easier to find a contractor because not all contractors want to sign on the loan, right? They're then tied into making payments, paying off the loan. Really, general contractors that are building ground up just want to be the general contractor unless it's their own project, right? So that's a huge benefit, and it actually allows people to gain experience in ground up construction instead of just doing fix and flips, right? Because even a lot of lenders, if you're a seasoned fix and flipper, sometimes that experience doesn't count towards ground up construction qualifying.
Yeah, I agree. Let's touch a little bit too on leverage, what we have to offer to first timers. So loan to cost, we've touched on it a couple episodes prior. Loan to cost is basically the total cost basis of the project, right? So what are we offering them? It's up to 80% loan to cost for a first timer specifically, which means they buy the lot for $100,000 and they've got a budget of $200,000. We're going to give them 80% of that total cost basis,
correct,
right? And then also we're going to cap them at 70% of the after repair value. That's going to be the biggest piece of what we have to offer, but we also get competitive on the rate and points as well to make sure that it's feasible for these clients.
Yeah, absolutely. So really what Connor's saying there is, unlike fix and flip, when we're talking about skin in the game, when we're talking about down payment, that's typically put on the front side, right? So it's put on the purchase price. Everyone talks about LTV, which is your loan to value, and then the client comes in with the difference. When you're talking about ground up construction, we're really talking about land purchase price plus construction costs. There is some other costs that you can include in there, but just to keep it for simple, you'd take those two costs, and really the investor would need 20% skin in the game of that project cost, right? So if you want to kind of touch on a purchase ground up construction compared to a refi ground up construction, and how if the borrower already owns the land, what does that really mean for the borrower there or the client?
Yeah, so if the borrower already owns the land, we still factor in the cost basis, right? So whatever they bought the land for with the construction budget, what we do from there is we use that loan to cost calculation, and instead of giving that those funds towards maybe the purchase price, right, the acquisition, we're going to use those funds to cover closing costs. Once we've covered closing costs, depending if there's more equity left over that we can use in that loan to cost calculation, we're going to build in some interest reserves to help cover some payments for whether that's 3 months, 6 months, 12 months, right, throughout your loan, so that you don't even have to worry about a payment throughout the process.
Got you. So really, it works out the same way. Whether you own the land free and clear, you're still going to get credit for purchasing the land, and you're going to be able to use any additional equity over 20% into the total project cost, right, to cover your closing costs and so on. So I get asked a lot of times, do I need to own the land free and clear, or can I do it as a purchase? To be honest, with land, the market for land, depending on the location, is less competitive, I would say, than maybe distressed property market to find a flip. However, if you have that cash on hand, I would say go buy the land free and clear. You're going to still get credit either way. And it really just helps you actually get that property, you own it, and then you can actually then take time to come and find the right lender, Park Place Finance, to actually then get your vertical financing.
Yeah, I think there's one other piece to add in there of why maybe it would be better to buy the land up front. And again, you don't always have to. We have many clients who use the acquisition of land with the construction loan in general, right? But if you own the land before you obtain financing, it allows you to take your time on the plans, right? Because that's the most important piece of the project. Because it helps you also shop for that contractor, or maybe use multiple different engineers to really perfect what you're building, and then find that contractor who can actually execute on that. And then second piece of that is getting the permits, right? So in some markets, we've discussed this in prior episodes as well, permits can take anywhere from 4 weeks to 6 months, right? It really depends on what market you're in and what city, county you're in. So having the land already and getting those plans approved by the city and getting the permits prior to obtaining the loan allows you to really roll through the project a lot faster. It doesn't allow you to stall out. We see it time and time again where People underestimate that market, or maybe it's shifted and those permits end up taking 6 months on a 12-month term. And that's not enough time for them to build the house and then sell the property or refinance. So they're having to extend their loan or maybe refinance into another construction loan.
Correct, which costs, right?
Correct.
And it comes out your top line. So that's a great point in terms of timings. It definitely does help to own the land free and clear first, and then take your time to get plans, permits, find the general contractor that has the necessary experience. And I think we should touch on what the necessary experience for that general contractor is, right? Remember, they don't have to sign, but really the documents that we need from that general contractor would be a contract between the borrower or the client and the general contractor for the work that's going to be performed. We would also need to verify that the general contractor has completed at least 3 like-for-like ground-up constructions in the past 3 years, whether that's for clients or for themselves on title. We need to see that they have a valid general contractor's license, and then we need to just see a copy of their liability policy. So it's really 4 items from the general contractor that really open up the door to these new investors being able to go ground up themselves. So.
Yeah, I think one of the biggest cases we see is somebody who is wanting to be a builder themselves. They go and get a license, but they don't yet qualify with a lot of people. So they're going to go get these 3 under their belt. So maybe they're the ones that are really building out the plans themselves. Mm-hmm. They're the ones building in the budget, making sure it makes sense based on their expertise, and then getting with the contractor who can execute that.
Yep.
So that once they get past those first 3, they can now become their own builder, right? Maybe they're starting their own company, or maybe this is just what they want to do for a living.
Yeah, that's a great point, because on the flip side, you are right. A lot of people are not going to hire a general contractor that's maybe never done a ground-up construction for their ground-up construction project, right? Because just like us, we require that the general contractor has experience. So that's a great point. If you're a brand new qualified GC, you've gone and got your general contractor's license, you can hire someone to do your first 3, and then now that you're a qualified general contractor, you've done 3 on title, that classifies as experience, and you can then go out and be your own general contractor after that and actually start moving forward and building your own company at that point. So
exactly.
That's a fantastic point.
So Joe, tell us about a time where you've come across one of these first-time ground-up builders and you've been able to help them execute.
Yeah, for sure. I mean, as you know, my book of business is heavily on ground-up construction, and a lot of the clients that I come across are first-time borrowers. Specifically, I work with a lot of people that are doing ground-ups in Florida, so Citrus Springs, Lehigh Acres, Ocala, Florida. It's really north of Tampa. It's actually a really good market to do these smaller-sized ground-up constructions. This year alone, I've probably worked with, I would say, 5 or 6 brand new ground-up construction borrowers. And within the year, they're actually already on to, I think 2 are on the second project, and then 2 are on their third project. The other one's just started with that first. But I can already see within a time frame of, let's call it 12 months, that clients have been able to build with us. And the ones that are on the third one, next year, they say they're looking to do the 4th, 5th, 6th, and they've already bought up land from their profits, and they're actually going to be able to get to the next bracket of leverages, whether that be 85, or now we do offer the 90% loan to cost product. So they'll be able to even expand their business much quicker, because the capital that they have is going to be able to be spread between more projects at once. So, you know, just that alone, understanding the process of the ground up, and then being able to build with us. Each time you actually do a loan with us, the easier it gets, right? Because we already have your documentation, our underwriters have already seen your file. It goes back to the same underwriter every time. And it always goes back to like making that relationship with a lender, whether you're doing fix and flip, ground up construction, DSCR, having that relationship to continue to build and grow your business. I see it time and time again.
Yeah, and I think one thing to add for our viewers is, if any of you guys out there have land free and clear, maybe a mortgage on it, or you are interested in building, make sure you reach out to us. We're happy to walk you through this process, help you understand how we can qualify a first-time builder and what it takes to actually obtain the loan. What do you need to start working on to go and get this ground-up construction loan, and how do you get this finished? So
Yeah, that's a great point. I mean, if you reach out to us, we can give you the list of documentation, right? You can start building that. Me personally, I like to do things methodically. I like to make sure I've got all my ducks in a row instead of trying to throw mud at a wall and see if it sticks, right? So yeah, reach out to us. You can get ahead of the game, even if you don't have land or you have land already. We can definitely help you out through that process to make it as seamless as possible, and make sure that the project that you're looking at definitely works for that area, because when you're looking at a project, we need to make sure that the plans fit to the area, and make sure that there's profitability in the deal that you actually are looking to build there.
yeah, absolutely. Well, just to recap on kind of part one of this episode, we went over ground up construction products that Park Place has to offer and just ground up in general, right? And so I wanted to retouch on Park Place Finance now offers up to 90% loan to cost on ground up construction, depending on your experience. We do not require general contractors to sign on the loan. Want to make that very clear for all viewers.
Yeah.
That's a huge key piece of one of the things we do have to offer to our clients. Very competitive rates and points on these types of loans. And then again, they're 12 to 24 month loans. We can offer 12, 18, and 24 months, anything in between.
Absolutely. And I know we said that the general contractors do not need to sign on the loan. Now, if you have a general contractor that is willing and able to sign on the loan, then at that point we can actually use their experience to move you up a bracket in terms of the leverage, which means less money down for the client. Now that is on specific scenarios, but that is also an option there as well. If you think a ground up construction loan is right for your next project, make sure to reach out to Park Place Finance for more info.
All right, that wraps up our ground up construction episode. So make sure to tune in next week where we're going to cover debt service coverage ratio loans.